This idea that we have to have controversy every time we have a discussion is, well, it's a bit Anglo-Saxon, it's a bit adversarial. We may well end up simply building each of us on what the previous panelists or speakers have said as we go along. This is an outwardly rather narrow topic. Crypto's 4-year cycle, is it dead? Do we really just mean Bitcoin? You know, I think the first question that we're going to address is, you know, why do people think there is a 4-year cycle? And, you know, what is it? We'll go into drivers and then see in what directions we spin off into. Just very quickly, by way of introduction, from the end, Yves is over from Paris, and his firm Tobam really is the sine qua non amongst digital asset managers. They're quants over in continental Europe. There's no doubt about that. Now, this really makes me feel like I'm a midget amongst giants, and so those of you who know me will be surprised that I won't be speaking very much from here. And I just want to throw that first question straight to Mr. Krachalov. For this first question, we're not going to stick to the seating order. We'll go with you first, Natalie, and then we're going to go over to Yves. Yves published a really interesting paper just about this very topic, and you're welcome to come up to him afterwards to get a copy if he'll release it to you. But Natalie, why don't you start, and then we'll see where we go. Yves, do you want to pick up on that?
Yes. So if you look at the past, I think there is little room for discussion. There has been a cycle in the past. Roughly about 18 months after every halving, the market has reached a peak, and then there was a crash. And about 24 to 36 months after the halving, the market would reach a bottom. And it was extremely regular in the past. What really, I believe, fueled this so-called cycle was, of course, the Bitcoin halving, the shock on supply. But there was another phenomena which would, because of the shock in supply, would not drive down the market after it has reached a peak. What has driven down the market in the past after the 18 months peak, the peak that followed the halving by about 18 months? In my mind, it is simply the quest for beta. And when you had an extremely strong momentum, those guys who were trading Bitcoin, so those who were hodling Bitcoin, of course, did not have any influence on the cycle. What really drove the cycle was those who were trading Bitcoin. And when momentum used to grow, people wanted to increase their beta. And a long time ago, the only effective way to increase your beta, in fact, there were two ways. The first one was to definitely take leverage, but this is not very sustainable in our world, you know, because of the risk of liquidation. The other way to increase beta was simply to buy shitcoins. If you if you had a certain number of Bitcoins and you were frustrated because momentum was going on and you were not much more leveraged than before, a way to increase your leverage at that time, to increase your beta, was to sell some of your Bitcoin and buy some shitcoins. And of course, by definition, shitcoins, you know, the cycle was not sustainable, and you had the crash. So in a way, the cycle itself carried its death. And because as soon as you sell the Bitcoin, you're killing the bull. I think we are approaching a moment in which markets are more mature, and I think there is still some people that buy, you know, more fragile coins in order to increase their beta. But we have now a derivative market which is much more mature, which offers you other ways to increase your beta. And you have a new instrument that has really emerged something like 2 or 3 years ago. It is treasury companies. If you wanted to increase your exposure to Bitcoin last year or this year or the year before, probably some people used to buy some listed stocks that offered you some kind of a leverage to the performance of Bitcoin. And since the the business model of those companies consisted into buying Bitcoin themselves, we are in a way moving from a cycle in which the bull market would kill the bull at the end towards a market in which the bull market would feed the bull. So this is, in my mind, one of the reasons for which in the past the cycle was some kind of mechanical. It would, the market would stall at a moment because we would move from a virtuous circle to a more vicious circle.
That's very interesting, and some of you will have spotted maybe an inadvertent reference to the cult of Mithra there, with the bull killing the bull, and the cycle of death and rebirth. Well, we seem to have moved into this, I don't know, a Vedic space there. Now, you mentioned the open interest question. I'm pretty sure Natalie's going to want to pick up on that, but first...
Maybe before we go into open interest, on the mechanical supply, because of the halving, I think at some stage in early days, it was a significant part of the daily supply, but now mathematically, it's completely irrelevant and it's completely dwarfed by ETF flows, by basis trades, by treasury acquisitions. So from that perspective, the importance of that signal itself completely collapsed, right? And even more so, miners as suppliers of the fresh Bitcoins into the market are realistically hedging away the exposure well before this additional incremental supply hits the spot market. So from that perspective, informational value of halving is non-existent today.
Yves, do you want to pick up on that?
No, I completely agree. Yeah? By definition, it's a halving, so the importance of halving halves every 4 years. And after a series of division by 2, the remainder is very negligible when compared to what it used to be in the past. No? On the paper we will publish probably today, we show that there is some kind of sort of a coincidence in the past. The M2 supply, by chance, coincided with this 4-year cycle. So is it going to continue in the future? Probably not, I don't know. But what I said in the beginning, it is that empirically speaking, there is no room for discussion. There was a cycle in the past. Now what really matters is to try to identify what were the drivers of this cycle in the past and what has changed from the point of view of whether those drivers will continue to be the engines of the returns of the Bitcoin. So the most obvious engine was a halving, and definitely the power of this engine has decreased massively since the beginning. And in the 4 years, the first years of Bitcoin, half of the Bitcoin were mined. In total, there are 21 million Bitcoin. 10.5 million were mined during the first 4 years. And it divided by 2, by 2, by 2, etc. So it was really massive when compared to the average daily volume of the Bitcoin. Today, it's really not relevant. I completely agree with that. Yeah. I believe that there is only one alternative scenario for Bitcoin. It is that central bankers become orthodox. The only adverse scenario. If they were orthodox, we would not need Bitcoin. And since we know that they have never been orthodox and that they always failed to protect the purchasing power of the fiat currency, we needed something else. What is very funny in the current cycle, it is that the central bankers have cycles. There is monetary expansions, and then from time to time there is tightening. We are today in a phase in which the central bankers are relatively reasonable. Quantitative easing has eased, if I may say so. It is tightening, and Bitcoin is paying the price for that, which is normal. What is very funny is the behavior of gold, in a way. So I'm not going to say gold is a shitcoin of today, but it's very funny that the only one which is reasonable in a way is the Bitcoin, and Bitcoin and gold is abiding by rules that are less mechanically clear, apart from the geopolitical tension, etc. So, if I wanted to think about what you said, Bradley, I would not say it's risk on or risk off. It's really about geopolitics. What really seems to drive the new momentum of gold. There is something which is even more bizarre. It's silver. And we know very well that if you look at the last 50 years, silver has always lacked, a clear trend or a clear, use case. So it really reminds me about the fact that the largest hedge funds always look for momentum. When they don't find momentum, they start one. And this is what happened in 2020. The last bull moment for gold was 2020. There was an incredible rally for gold, and Bitcoin did nothing. And as soon as hedge funds stopped milking gold, as soon as gold calmed down, they looked for another, thing to start the momentum on, and Bitcoin rallied. So probably, unless gold reaches the sky, at a moment it will calm down, and then we'll see what happens.
Cool. Yves?
Okay, so since I have less than a minute, I guess.
No, we have 1 minute 40 seconds almost.
1 minute 40 seconds. Okay, what fascinates me currently with gold is the main criticism I have against gold, it is that gold is not auditable. If I tell you I have 5 bars of gold, of course you will trust me. But if I tell you I have 5 bars of gold, please lend me $250,000, I guarantee that by the gold I have, you will want to audit my gold. And the only way to properly audit a stock of gold consists in melting it. So what's really funny it is that people used to criticize Bitcoin by saying it's virtual. In fact, with the gold that is traded in the market, it's much more virtual because nothing has been ever audited. It's fascinating. It's the most virtual asset in the world is the gold that we trade on market. Nothing has been audited properly. So at the beginning of any equation in finance or economy, if you take Ito's lemma, the first sentence is, let's imagine there is an asset that we are going to call cash. Why do we need that? Because the cathedral of trust that is the economy need a cornerstone. It needs an unquestionable asset. For thousands of years, the unquestionable asset was gold. Unfortunately, gold is not even auditable. Then the unquestionable asset became the dollar. The problem of the dollar is that even Donald Trump says it is the objective interest of the United States to devaluate the dollar. So this unquestionable asset, this cornerstone of the cathedral of stone, of trust, is vacant. And nature hates vacuum. And there is a small orange object raising his hand and saying, I'm a candidate. And most of the problems of humanity were taken care of across history until technology brought the final answer. And the problem of storage of value has been a constant problem of humanity until for the first time, on the 3rd of January of 2009, there was an object which claimed maybe I can solve this problem in a technological fashion. And very often this is the end. Then we move to a different problem. And this is, in my mind, what is very, very incredibly specific to Bitcoin.
Well, whether that millennium arrives anytime soon or not, we can only see. life for millennia has been very much about those kind of things being on the horizon, more likely than not as time goes on. I hope that you will all join me in a few seconds in acknowledging the excellence of our panel. You won't get a greater concentration of expertise very often on a stage. But first of all, does anyone have any questions? Hold your hands up. How extraordinary. There's no time for that. You'll have to come and find us. But please join me in thanking our 5 absolutely superb expert panelists.